to part 4 of our 7-part behavioral investing series. Today, discussing herding bias. I am Chad Narani, a retirement plan consultant here at BFSG. So what is herding bias in the first place? Also known as herd instinct. Well, it's the remarkably common behavior of following the crowd or the herd, and in many cases without otherwise really knowing why, right? Just think about being a sheep and kind of the herd just moves without, really knowing where they're going, following, somebody that's shepherding them. So an example of this in our daily life, suppose you are traveling and maybe you're looking for a restaurant to try out for lunch, and you're looking for that local favorite. You come to an intersection and there's 2 restaurants, one that's nearly empty, one that's just completely full, right? Now, at the end of the day, assuming that the wait time is reasonable for what your timeline looks like, most people will choose that crowded location, assuming that crowded means better. Now, at the end of the day, that might be the case, more times than not. But is it always the case? And this is what I like to think about, right? What about a day like Tuesday, when for a lot of us, yours truly included, it's Taco Tuesday, and I'm heartbroken if I don't get tacos on Tuesday. And a lot of taco restaurants will serve tacos at a remarkable discount, right? And it's a great deal to go in and get a few tacos. Now, if it happened to be Tuesday and you go by and it's a taco restaurant and it's really crowded, the other restaurant might be slow only on Tuesdays. And what if 6 other days of the week, the other restaurant was the busier location, right? So you can't just pick and choose. Now for a traveler, like if I was traveling, I don't want the local favorites. I can get great tacos at home. I would rather not have Taco Tuesday while I'm traveling if there's another local favorite, but I wouldn't necessarily know that in this example. Now, let's bring this example to investing, right? And where we can see this really everywhere across the marketplace. So at the end of the day, just think about the .com bubble, right? Where we saw a massive run up in a ton of stocks. The entire market was up over this period and then subsequently crashed, right? Just the herd and the crowd piled into anything that said .com at the end of it. Eventually, that entire market crashed. The next one, meme stocks that we've been seeing very recently, right? All started in the late 2020 when you saw GameStop and a number of other companies that were essentially just business models that were going bankrupt, right? Investors were not buying these companies anymore. Most people buying all their products online instead of going into the store for them. Even all the games are really online on some of these consoles. GameStop was effectively a failing business model, but with a short squeeze out, and some retail investors really trying to kind of give it to a hedge fund out there and force them to lose money. You saw the stock, not even quadruple. We're talking about 100% plus gains in GameStop over a matter of days and months. Eventually, though, that all collapsed, right? And it came back to what would at least be a little bit more of a fair value, arguably still an inflated stock price from where it was just a couple years ago. But yes, are there some people that made a ton of money in that transaction? Correct, right? They got in early, they sold right within a matter of days or weeks, they rode it really high up, but most people in that trade lost, right? They got in halfway up, right? Or even all the way up. And then when that trade unraveled, it unraveled remarkably quickly. So quickly that most people didn't have time to get out of it, right? And what's crazy is it kind of unraveled and it went back up and it went back down and back and forth. But at the end of the day, this is just a perfect example of there is no fundamentals behind why the stock is moving. This is just people following the herd, right? People said, let's buy it, it's going up, and a bunch of other people, without doing their own research, jumped into the trade. And that is just a really risky way to invest. So if you don't think this is a real thing, and you say herding bias, absolutely, I don't believe it. Check out the video, I put a link, it is on YouTube, to an elevator video where you see a bunch of people get onto an elevator, or somebody gets on an elevator, and everybody else is on there facing the wrong direction. It is hilarious to watch this person eventually face the wrong direction too. Would that be you? I don't know, but check it out. And don't forget to check out our next video in the behavioral investing series, ambiguity aversion.